Pratik Oswal is now joining us from Motilal Oswal Asset Management. He looks after passive funds and now is also very successfully launched a defense fund. Pratik, morning. Thanks so much for your time. Pratik, talk to us a little bit about the rationale of the defense fund, right? Because as I told you, that opinion is divided. Some are saying that bulk of the price orders or all these positives are already priced in. Others say the story is structural. The data shows the stocks have run up indeed. You have raised a defense fund. Talk to us about the rationale of that and how are you differentiating between low valued and high valued stocks in defense now?
Yeah, good morning. Thanks for having me on the show. So essentially, we launched a defense passive fund. It's called the Motilal Oswal Defense Nifty India Defense Index Fund. So it's a passively managed fund. Essentially, you're looking at a stock portfolio of 15 stocks, and it's market cap weighted. So the bigger stocks will get a higher weightage. We believe that defense is a space where stock picking becomes extremely difficult because there's so limited number of stocks. A passive fund makes more sense because you have only 15 stocks that sort of qualify for this index. And we hope to have a lot more stocks that qualify for this index in the future. But essentially, we believe that, as Pankaj said, this is obviously a great long-term opportunity for a lot of investors. As a house at Motilal Oswal, we are long on most of these stocks. We have them in some of our active portfolios as well. And we believe that defense as a theme has a very small percentage allocation towards something like a Nifty 50 or a Nifty 500. A lot of our investors who want to take long-term bets on this sector can now do it through a passively managed fund. In terms of long-term, what do we see as an AMC? I think there are a lot of growth levers, in this space. We believe that this space is because of self-reliance as a big theme going forward. Manufacturing has a big theme forward. We believe defense is manufacturing itself is we believe is a very large theme as India becomes more export oriented. Today, only IT and pharma tends to be big exports, but over the next decade, we believe manufacturing can be out there as well. And defense is a part of that is also large. We already, export to 75 different countries. Exports are up 3.5 times. And we believe the government's mandate is to reduce imports by around 70% in the next 5 to 6 years' time. So we believe that, exports is a big opportunity, import substitution is a big opportunity, and also our defense budget itself, while the world grows at 3%, our defense budget is growing by about 10% every year. And it's already 13% of our overall budget for the year. So it's a very hard-hitting, very big item, and we believe a lot of it will come to our own companies as we scale up from here.
What is it exactly that we're looking at in terms of, global spends, Pratik? Because, while India may be the fourth biggest when it comes to the defense spends, but we're still way far behind from a US, China, wherein the average, defense spending per year for US is, over $900 billion.
Yeah. So overall, I think the global, if you look at global spend in defense, it's been growing at it's currently at about $2.4 trillion. It's growing at about 3%. What we've seen is because of the recent crisis at, recent wars that are currently ongoing in the Middle East between Russia, Ukraine, and also tensions happening in other parts of the world, defense budgets have increased globally. I talked about the 3% move. Last year, 2023 calendar year, its overall budgets have increased by about 20% globally. So what we're seeing is that globally also a lot of countries are now spending an increasing amount on defense. I think this is because of geopolitical connections mostly, and I think this will also augur well for Indian companies who are going out there and also getting these mandates to manufacture.
You were making a very interesting point. Let's scratch a little further. You're saying that up till now, yes, the stocks may have run up, some of them, a clutch of them, half a dozen of them, but you see the opportunity of defense widen and the big becoming bigger, and beyond the most obvious names, new categories also getting created because it's a long term. Can you talk to us a little more about it? Some of the companies you expect to become index components in the next few years, is it?
Yeah, so the way the index is structured, it's actually a few large cap names and a lot of small cap names. There are about I think 65% of the index will be large and mid cap, and about 35% will be small caps. So the opportunity is in both sides. You have obviously small cap names that are getting very healthy order books. You also have a lot more companies that will qualify for this index over the next few years. So if you look at the criteria for screening, what really qualifies for a company to be in this index, it's two things. It's basically companies that are part form of SIDM, which is the Society of Indian Defense Manufacturers. So they have to be a part of that. And about 10% of the revenues have to come from defense. So what that means is that you only can allow serious, I would say manufacturers who are serious, who have a bulk of the revenues coming from the space to qualify. And we believe a lot of companies are already in the space, but maybe their revenue component is not meeting the criteria, which we'll hopefully see over the next few years' time. So we expect a lot more larger names coming into this index over the next couple of years. But for now, as you said, the order books that we see is quite healthy. And the government also has, I think a couple of weeks back, one of the ministers announced that we want our defense exports to be upwards of 50,000 crore by the end of the decade in about 5 years' time. So I think that also is a big impact, a big sort of driver for this for this index. I also agree with the fact that order books are very strong, and order books obviously don't affect your P&L balance sheet. They're just so the only way you're able to make order books into reality, which is P&L balance sheet, is to expand capacity. So I think the ability for these companies to really go out there and make sure that their manufacturing capabilities are expanded to cater to these order books will really determine their stock prices in the future. So far, what we've seen in the last 3 years is that their profits, if you look at the profit numbers, yes, I do agree cash flow numbers may not be as high, but if you look at the overall profitability, they've I think most of these companies have doubled or tripled their profits just in the last 4 years, 3 to 4 years time. So I think there is a lot of growth that is being priced in the index. And that's why you're looking at valuations to be where they are right now. But we believe that this is not really, may not be a short-term thing, but a very, very big structural sort of growth story in the long term.
But a lot of credit as well goes to the government, as you as well alluded to, the kind of thrust that we've seen on the entire defense space. The question is now with the coalition government, do you think that we could see compulsions changing, decision making changing, maybe even priorities for the defense space changing, and that could alter the dynamics of the sector as a whole?
Yeah, so that was a risk factor, and that was one of the reasons to why we sort of delayed the launch, since because honestly this sector is the customer is just one person, it's the government of India, and we believe that there needs to be a lot of clarity before we go there and launch this sort of a fund. And what was very I would say encouraging is that the communication and from what we heard from various departments and various sort of ministries is that there will be ongoing, I think the same amount of push that we've seen in defense that has been the last 3 years will continue in the future as well. So there'll be heavy. So what we've seen is that this sector has had also change in landscape, where there was a lot of bureaucracy and red tape. There was a lot of hurdles when it comes to domestic procurement, which is also eased, under this government. Second is obviously more self-reliance in this index, and also third is forex, which most people don't talk about, is that this sector is actually, we were net importers of defense equipment. We have a very large import bill, probably one of the highest import bills across all categories, and there's an opportunity where this import can become actually net exports over the next decade. So we believe this will be positive for the currency. I think, and as forex is also a big part of the government's agenda when it comes to currency sort of stabilization, which is already they've done a very good job in the last 2 or 3 years 3 years time. So we believe that the communication has been very consistent, and we believe and I mean, if you just look at the stock prices of these companies, it shows that the government continues to progress in the same way.
Thanks so much for joining in. Good to get in your thoughts on the entire defense space.
If you like this video, then like, share and subscribe to ET Now.